Hi, this is George Beyrouthi from FS Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. Today I will show you how investors and traders can make money on our stock market. I will show you what is hot and what is not, and what you should hold and what you should fold. So enjoy the presentation and give us feedback if you wish. First of all, let me give you some global data. On Wall Street, the market was down 0.4%, that's on the Dow, and the S&P 500 was down 0.5%. The Nasdaq was down nearly 1%. In Europe, the Stoxx 50 index, which comprises most major European markets, was down 0.5%. The FTSE in London was down 0.9%, and the DAX in Germany was down 0.3%. The spot gold was up 0.1% to 1,292 an ounce. And West Texas crude oil was trading at $50.78, was down 0.6%. Iron ore price was up 0.5%, that's important for BHP, Rio and Fortescue, trading at $73.80 US per ton. And aluminium was down and copper was also down. The Australian dollar was trading at 71.95 US cents. And Bitcoin this morning was trading at 3,666 US, up 125 US from this time yesterday. The above chart is showing you that the volume continues to remain lower on our market. We've had before Christmas just above 2 billion stocks trading, and at the moment you can see from Christmas time it's been very close to slightly average of 1 billion stock per day. That is actually relatively low volume, and hopefully after this week or maybe early next week we're going to start seeing the big institutions coming back into the market. And it looks also that the mums and dads are sitting on the sidelines, a bit concerned about trading. At FS Securities, we have over the last 10 years designed a mechanical system based on technical analysis that includes 8 indicators. They are technical indicators. Through them, we're able to create a strategy for the investor, for the conservative trader, for the aggressive trader, and the very aggressive trader. And as you can see on the table at the moment, about 5 weeks ago, this is by the way weekly forecast, we've gone from very bearish on the US market to neutral and slightly more bullish for the very aggressive trader. However, we think that there are a lot of uncertainty in the market, and we most likely see a lot of volatility. But what's appearing obvious here is that gold has been quite relatively strong over the last 5 weeks. And 3 weeks ago we started telling you that you must take some profit out of your gold shares if you are in gold. And the Australian dollar has actually turned slightly bullish the last few days. We were actually very bearish, and if you remember last week we dropped below the 70 US cents, and we've seen it the last few days climbing above the 72. One thing about the Australian dollar, Brexit looks like may actually cause some concern about the pound, and if the pound drops or slumps, I would say, because of what is likely to take place at the Parliament, Theresa May present a certain proposal that may be knocked on the head. The pound may drop, that may push the US dollar up, and obviously if the US dollar goes up, our Australian dollar may get slightly weaker. So this is one concern we have. Also, another factor is that the trade war between China and the US is causing some concern about the global economy, and that may actually show some weakness also in the Australian dollar. What we see here is the Dow Jones chart. We've gone for, as a matter of interest, that when Trump became president, up to the peak, the Dow actually went up by nearly 36%. However, from the peak of nearly 27,000, we dropped around Christmas time or slightly below before Christmas time to below 22,000. We've seen it now going up to 24,000, and it looks like the Dow most likely will go sideways until certain events around the world will eventuate. On our local market, gold sector has been the star over the last 5 weeks, as we said, and we can see that also we've gone from more bearish sign 5 weeks ago to, for the very aggressive trader, we are still bullish. However, for the more conservative and the investor, with the exception of gold, we are very neutral. Over the long term, over 2019 at FS Securities, we believe there are a lot of volatility, but we are bearish, taking a bearish position for 2019. So beware. Now, our market yesterday rose by 17 points, sorry, actually 9 points. It opened at 5,774, went as high as 5,802, and closed at 5,773. So in actual fact, it was a non-event day. It opened, went high, went down, and closed almost where it opened. Our mechanical system is telling us, as I mentioned earlier, that you may take some profit in Newcrest wines. Rio started to appear a bit stronger here for this week. And Woolworths, we told you that we liked Woolworths several weeks ago, and Woolworths continues to do well. And we told you that we are bearish on Suncorp, and Suncorp continues to be bearish. CBA, of all the banks, we like CBA, and we think if the banks are going to move up, CBA will be the best performer. A week ago, we recommended we go into a trade on options, and we said that we wanted to go sideways on Woodside Petroleum. When we entered the trade, Woodside Petroleum was $32.42, and we said our target on the upside was 34, and on the downside about 31. And should the market drops below 31, we want you to take some profit or take a loss and get out of the market. However, this particular strategy concerns that the market is moving sideways and will oscillate between 34 and 31. So that means we don't want it to go above 34 and we don't want it to go below 31. Well, 3 days ago, the market was trading at $33.26. A rise of $2.5%. That is actually on the basis of where we entered. And this is actually the chart for the options trading. As long as the market continues to be between 34 and 31, the money that we receive, because this is a credit trade, so we received money against a collateral that you may have in other options, or shares or cash. The maximum profit is 17 units and the maximum loss is 32 units. So it's approximately a risk reward of nearly 50%. Now 17 units represents, that's for one contract, so each contract has got 100 shares, so you multiply 17 units by 100, and depends on the number of contracts. So if you have 100 contracts, therefore you multiply 17 units by 100 times another 100. And the loss can be also compared the same way as well. So of course these are beyond comms and fees. Well, finally I want to tell you that we have a disclosure. I don't know your financial situation, so obviously everything I said here is for general advice only, and if you want to take any particular advice that we gave you, please consult with us beforehand, and or you may want to talk to your professional advisor. Finally, if you want to talk to us, you write to me at george@fssecurities.com.au, or you can call me on my mobile 0411 25 9526. Well, finally, I can say to you, have a good day and happy trading.